Bitcoin is a more asymmetric bet than gold, and therefore I own more Bitcoin than I own gold. I didn't start out that way, though, by the way. What's happened is Bitcoin's gone up a lot. It's a call to try to help people to understand that monetary debasement is going to hurt them, and that the two right choices to solve that problem are gold if you're more conservative and you don't want volatility, or Bitcoin if you want to be aggressive and you want, more price performance.
The financial system is in more trouble than ever, and Bitcoin is the best way to protect your wealth from the chaos ahead. That's the latest word from the founder and managing partner of Equity Management Associates, Larry Lepard. Gold and Bitcoin are two of the strongest ways to shield yourself from the fallout. Gold has stood the test of time, offering stability when fiat currencies fail. However, according to Lepard, Bitcoin is where the real asymmetric opportunity lies. Over the next decade, as central banks keep printing money and global debt spirals, those without exposure to Bitcoin or gold might regret it. If you prefer slow and steady, gold is an option. If you want a shot at serious price appreciation, Bitcoin is the bet. Make sure to stick around until the end of the video as Larry Lepard shares more exciting Bitcoin outlooks. Also guys, only a small percentage of my viewers subscribe. If you enjoy staying updated with finance content, consider subscribing or liking the video. It's free, and you can always change your mind. Now, let's return to the video and hear from Larry Lepard.
We're in a very big fiscal mess with a debt doom loop that we're in, and the spending and the deficits. And we've already had a bunch of big prints. I mean, the book is called The Big Print. These big prints started a while ago. There was a big one in 2008, and there was another big one in 2020, and I think more are coming. And so, the pattern now is pretty well established. And I just thought, gosh, the average American's not necessarily thinking about this or aware of this. And I'd like to see people protect themselves because, as you and I both know, we're boomers. A lot of our boomer cohorts and crowd, they're all crowded into stocks thinking that stocks are going to continue to make them rich. And sadly, I don't think that's going to happen. And so I wanted to try and issue a warning. And so, the book's kind of a warning to try and address that issue. I'm still a gold bug, Trey. At my core, I still got a lot of gold. I believe in gold. I run a gold fund. I think they both have a lot of merit. They're different. They have different risks and opportunities in each one. I want to get the common man to understand, or a woman to understand, that we are in a fiscal mess, that's going to impact their lives in terms of inflation and the stock market, which is very overvalued in the future. If they don't have some allocation to gold and or Bitcoin, I think experience regret in the next 10 or 15 years. I'm arguing for those two things. I've gone full crazy orange pill. I think Bitcoin is a more asymmetric bet than gold, and therefore I own more Bitcoin than I own gold. I didn't start out that way, though, by the way. What's happened is Bitcoin's gone up a lot. Mm-hmm. It's a call to try to help people to understand that monetary debasement is going to hurt them, and that the two right choices to solve that problem are gold if you're more conservative and you don't want volatility, or Bitcoin if you want to be aggressive and you want, more price performance. But, the price performance isn't free. We've had some huge drawdowns in Bitcoin, and people have to be aware of that when they get involved in it. I do still believe very much in gold. A lot of people think that Bitcoin's going to instantly flip gold, and I don't think that's going to happen because there are 8 billion people on the planet that understand that gold is money. Mm-hmm. And it is, until Bitcoin came along, it's the soundest form of money. Mm-hmm. But the once in humanity, I know it sounds hyperbolic. I say that because, until Bitcoin came along, we all know that money is somewhat of a collective illusion. It's what we all agree has, exchange value. This is Karl Menger's Austrian term. It's all a matter of perception. We perceive the dollar has value because we can go buy things with it. There was a time when that was shells and salt, and there have been tobacco, and lots of things have been used for money, but the dollar is what we use today. Until Bitcoin came along, here's the important point. Until Bitcoin came along, every form of money, every single one before, had dilution, which is to say that its supply grew over time. So the number of monetary units grew. Now, gold was the best. It grew the smallest at 1.7% a year, but it still grew. And in 50 years, we'll have twice as much gold on the planet. It's still much better than fiat, obviously. So here comes Bitcoin, and a lot of people say a deflationary currency can't work. We can talk about that, but here comes Bitcoin with a scheduled fixed supply of 21 million. That's it. And so that's different. That's really different. I don't think hyperbolically. I kind of compare it to, like, there was an era pre-air flight, and then there was air flight. or there was an era pre the telegraph, and then there was the telegraph, or it's an invention. It's a type of money without any dilution. That's why I make the statement. I know it's hard to get your arms around it, and it sounds extreme. We're all old enough and smart enough to know that there's nothing in life is certain. Even the success of Bitcoin is not certain. There's technological risks, there are other risks. I think when you're investing, you want to construct a portfolio. And what I try to argue, I have a lot of clients who are on the older side, and I never suggest to any of them that they go heavily into Bitcoin. But I do suggest very strongly that they don't have zero Bitcoin because the upside optionality, the asymmetry, and that's basically, why do you and I invest in gold miners? Because we know that they have an asset which, generally speaking, the prices and the valuations are so low compared to the underlying value of the asset that if they're able to pull that asset out of the ground on some kind of reasonable terms, they're going to generate cash flows that are multiples of what we're paying, even total market cap right now. And so that's that asymmetry, in a gold bull market and a gold miner bull market, gold stocks go up 10, 20, 50, 100x. I think there are room for lots of kinds of investments. About the only thing I do not recommend investing in now, even owning stocks, as overvalued as they are, there are some good stocks, particularly in the commodity space, particularly international stocks. Brazil's very cheap right now. The only thing I really think people just are silly or foolish to own is any kind of debt with duration. But, 10-year at 4%, no. A 30-year at, 4%. I think that the owners of those are going to really see substantial diminution. Their wealth is going to go down.
Meanwhile, Trump Media has launched TruthFi, a new financial brand focused on crypto and ETFs, showing strong confidence in the future of digital assets. The company plans to invest up to $250 million in Bitcoin and other cryptocurrencies, with Charles Schwab managing the funds. This step could help more people get into crypto, making investing in Bitcoin through traditional financial services easier. As more companies and investors join the crypto space, demand for Bitcoin will likely grow, pushing its value even higher with Truth. Trump Media is making a strong bet that crypto is here to stay. Now, let's go back to more insightful takes by Larry Lepard.
I try to be a balanced guy, Trey. I just try to recognize that nobody knows nothing. I look at all sides of the issue, and like I said earlier, it's become a bigger part of my portfolio. It didn't start there; it went up a lot. That 7's not guaranteed, but I think if you read it and you read and understand the Metcalfe's law piece of it, the thing that I don't know, I'll disclose this about the book, and I wonder what your reaction to it was. When I went and I looked at the math of how much these network businesses have increased since the IPO.
Yeah, you have that paragraph on Google, Amazon, etc.
Right? That kind of just blew my mind. I'll tell you what Trey's talking about. There's since its IPO, Amazon is up 218,000%. Since its IPO, Google is up 9,000%. Since its IPO, Facebook's up, I don't know, they're big numbers. General Motors, from 1916 to present, is up like 400x. So I was taught investing in a world of linear growth and PEs and PEG ratios and Sharpe ratios and all the traditional metrics that any investor learned. Graham and Dodd kind of stuff. That's what I was taught. And then along come these network businesses. In 20 years, big, powerful, almost monopolistic networks have gone up thousands and thousands of percent. We've never seen this before. And it's interesting. I confess in the book, I missed it. I remember looking at Google and saying, gosh, this thing's growing like a weed, but it's not making any money and it's really expensive. Nah, I don't want that. Same thing with Amazon. Same thing with Facebook. Do you know what I mean? And so I just missed it. Networking businesses accrue value in a different way. I think the important takeaway from anybody watching this and skeptical of Bitcoin is to learn more about it and accept the possibility that you don't have to buy a lot of it, but because of this network, growth and valuation growth, you might be really experience regret if you don't have some of it. Primarily because the invention is actually in the proof of work and in the way the network got developed. And they could have killed this thing in the early years. However, and it's based on computing power that runs the algorithm. And now that computing power is enormous, right? There's billions of dollars spent on computers that run that. But in the early days, you could do this on your own Apple PC, or IBM PC, and it wasn't a lot of computing power. And so if you gained up and you got 51% of the computing power, so if somebody comes along and they try and build another one that's similar, it's going to have a similar design. It's going to have that similar feature. And in the early days, people will, and I've heard it's happened, I'm not familiar with the cases, but I've heard people will attack it. So in other words, the fact that it kind of grew up, and this actually goes also to the government risk. And so now we're here It's kind of unstoppable. It's very hard to roll back all of that history. And if somebody tried to start another one, it would be vulnerable to that 51% attack issue. I'm not saying something better can't come along, and I always have my eyes open for that. But boy, if you look at the number of users and the size and the compute power, I mean, there's nothing even close. It would take something really substantial to bring something else along. And even if that happened, you'd have time to make the change. And that's why the hardcore in the Bitcoin world say, not your coins, not your keys. And we're not big fans of the ETFs because the issue with the ETF, Trump is favorable to it. Let's say, the next 4 years don't go well. And in 4 years, the voters are fed up with this and they go hardcore blue. And it goes to the other side. And Stephanie Kelton's now the Treasury Secretary. Andrew Yang is VP, and they do universal basic income, and they're going to print money like crazy. Gold and Bitcoin are the two things that are telling everybody that the dollar's failing. We can't have that. We're going to tax them at 90%, and we're going to do what Roosevelt did. We're going to seize the gold, and we're going to seize the Bitcoin. We're going to go to those ETFs and say, hey, ETF, company, Fidelity or BlackRock, send us all those Bitcoin and cash your people out for dollars. That's entirely possible. And it's certainly one of the risks. If you were a hardcore Bitcoiner, you wouldn't have your money in the ETF. You'd have it on your own wallet in cold storage. You'd have your 12 words. And you might make a decision at that point in time that you didn't want to comply with the order to turn yours in. And you might decide you want to change your citizenship somewhere else. But all of those things are certainly risks. That's why I say, there's sensibility here to having balance among all these assets, right? You just don't know what's going to happen.
Bitcoin's decentralization is its greatest strength, but growing institutional adoption through ETFs threatens to concentrate control in the hands of financial giants like BlackRock, making it easier for governments to regulate or seize, just as gold was confiscated in 1933. While institutional involvement boosts demand, true protection lies in self-custody, as those who don't hold their keys don't truly own their Bitcoin. With fiat currencies inevitably devaluing, Lepard sees Bitcoin as the only digital escape from a broken financial system, urging investors to buy and take control of it. Before we go, if you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all in the next one, and as always, all the best.